Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading here. I'm going to go over a couple of things that we saw on the economic calendar for today, as well as those bank earnings, the bond yields, and more importantly, my trades and where I stand as far as the market goes. Before we get into it, hit the thumbs up for the video. If you are new, click that subscribe button. All right, getting into it. The economic calendar today, we saw more economic slowdown type of numbers. In U.S. retail sales, you saw import price index, retail sales minus autos. We heard from the Fed presidents. The economy is definitely slowing down. There's no doubt about that. So usually when this would happen, you would see bond yields go down. You would think that the Fed was going to, lower rates, or at least not keep them as high for as long as they are expected to. But we did not see that. Why didn't we see the bond yields go down today? Well, we saw the banks. Now, you can see this huge selling in the bond market, just unloading bonds. The yields are spiking. Look at this 1 month. A 1 month treasury is yielding 4.26%. Putting your money in just for 1 month and you will get that yield. This is up 0.26 basis points today. That is insane. That is a huge move. Just an absolute monster move on the front end here of the yield curve. Seeing the banks, their earnings were really good, or at least not as bad as expected. You see JP Morgan, a huge gap up today on their earnings. That sent yields spiking and sent those bonds down. All right, so that's where we're at right now. How would that affect the market? So when the bond yields go up this fast, usually that hurts the tech stocks. Now, that's what we're seeing so far. We're seeing a little weakness. But the only thing is the market has been trading a little differently lately, not trading as consistent as far as the news goes. So I would suggest, and what I'm doing in my own trading, is trading only supply and demand zones. I don't care if it takes me days for it to get into my supply zone or days into getting to my demand zone. Luckily, this past week, we didn't have to wait for days, right? This was a very choppy week and a half, 2 weeks of trading. So we've gone from demand right to supply, back to demand, back to supply, back to demand, back to supply. You can see here. I mean, even today, we hit a low here of 315.74 on the Qs, and we're now at over 318, coming back into supply. It's just a wild market. I know that it's very tricky to trade this type of market. Just given yesterday, just look at yesterday's daily candlestick. Right here, this big breakout candlestick on the daily chart. You can see here, right there, big daily breakout candle, highest close since in February, okay? That's on SPY. And then today, we gap all the way down, trade even lower to that 410, very key level on SPY, and now we're starting to rally a little bit. But that's a doji candle right here. So we gapped down, came up, and then it's been just a wild day. On a candle the day before like this, and even the day before that, look at this big red candle on pretty decent volume. The next day having this big green day on very similar volume. And then today, just seeing a big range there. And we're right in the middle of it. So that's a doji handle of indecision. So that's where we're at. Extremely choppy stuff. What I have been saying, and I'm just not bullish the market right now. We're coming into earnings season, and I think that the tech industry, all those NASDAQ stocks, already have so much built into their earnings where I can't see any big surprises to the upside. That's not good. When you're coming into earnings season at highs for the year, that's usually not a great setup for all your tech stocks. I don't know if it's going to happen, next week or the week after when we see some more really big tech stocks reporting. It might be a couple weeks, but this is where we're at right now. Just in this zone, just trading in this range. And that's all that I've been trading. And now I'm currently up 463 on the day. All positions are closed out, sold at demand, right? I was taking my shorts into the demand zone, took my trades off, 463 on the day. So this is the 4-hour chart right here. And to find that supply and demand, you just go back to the charts, right? You look at it on bigger time frames. I look at the daily chart and then I go into the 4-hour chart. These are really, really good long-term charts to look at. I also look at the weekly when I'm doing my weekly watch list videos. So I like to see like where the trend is going. But right now, where you see these clear rejections, right? It comes into that supply, drops pretty quickly, comes into that supply, drops pretty quickly. That's called the supply zone. So then when it gets right back into it again, we see that dropping, and then it breaks through it. So finally has enough buy orders to get through all those sell orders. And then what usually happens is that same area that was acting as resistance will then act as, yes, support. So that's what we've been doing. Taking puts in this red box. We've been taking calls in this green box. I haven't been taking calls. I've been selling my puts. I am only shorting the market right now, especially the Qs. I find that the QQQ right now is a lot more friendly to be shorting since it is up 23% on the year. I feel much more comfortable with something that extended to short rather than shorting SPY, which really hasn't made new highs yet for the year. This one has. All right. You can see it's trying very hard, to get through this area. But I think that this is where we're going to see a lot of that resistance, especially into earnings season. So that's what I'm at right now. That's where my bias is right now. We'll see what happens, but the Qs are definitely extended going into earnings. So that's usually a good setup for a little bit of a pullback. I would even take a pullback to this trend line. You would still be in an uptrend for the year, right? You would still be bullish on the year. You would get that nice pullback. And that's what I'm looking for right now, because this chart has looked pretty good from setting those lows, right, in October, that nice retest right here at the beginning of the year, and then showing a lot of strength. So this chart is very strong. Keep that in mind. If you are taking short positions, you're going against a very strong market. But I like doing it when it's extended instead of taking shorts just anywhere. So that's where we're at right now. Hit the thumbs up for the video, and I'll see you on the next one. Take care, guys.